Hey, good morning, everybody. Happy Tuesday. So let's see how things are shaking out this morning. Yesterday was a kind of interesting day, right? Everything kind of started off in a good vibe. And by the time it was over, the NASDAQ was in the crapper, and which, by the way, closed in that correction territory. So it'll be interesting to see what happens this morning. But the S&P ended up closing red while the Dow was green. A lot of people ask me about this. Well, how does that happen? I mean, Apple is on both, Microsoft. You know what I mean? How does this happen? How does the S&P go down when the Dow is going up, right? The Dow is only 30 stocks, right? And well, look at your S&P right now, right? Your Apples and stuff, they're not leading right now. Your Microsofts, your FANG stocks and things like that. Tesla, right? Remember that big behemoth was added to the S&P 500 not just recently, and now it's on a terror down going down, right? It's having a good pre-market this morning, but I don't know if that's enough. Let's kind of talk about charts, guys. But this is what happens, guys. This is what's really happening. The big myth you hear out there is that, oh, the minute risk starts to show its face with the markets, what happens is uh, big institutional money will start going into gold or bonds, or you know what I mean, cash and stuff like that. Really, guys, if you ever have a 401k and it has a managed fund inside of it, you watch the positions in that cash level never really changes. It's always invested, and that's what we always say: keep your money working for you. Cash is a poor man's asset. Cash is your most high risk asset, right? Especially when it's in your pocket. What's the biggest risk for cash? Spending it frivolously, when you could have it working for you, right? That's a whole other video. But look, guys, what really happens is the smart institutional fund manager, they immediately take their more risky positions, like maybe they had ARK, right, or something like that, or Palantir, uh, great price movement, right, but no dividend and really no stability, right? In a bad market, it'll take a Palantir down. And that's your fear, right? You don't want to have you don't have a good stock going into a bad market. It gets taken down, it stays there for a little while, and it does nothing. It becomes dead money. What they do is they move into the Dow 30, your Cokes, your T's, your big dividend stocks. Why? Well, guess what? If they stop getting that price acceleration, right, and the market does take a downturn and it stays there a little while, what are they getting? They're getting dividends, they're getting free shares, and they're getting them cheap. And that's a smart way to do it. And then they take their normal percentage and they might maybe add a couple percents to gold or something like that, depending on their flavor. And that's what really happens, guys. And that's what you're seeing happen right now. There's a little bit of fear in the market. You saw it yesterday too. It was confirmed by the VIX, right? The VIX, with the market starting to rally a little bit, the VIX popped a little bit, went back over 25. And that's sure those are all your little signals. But other than that, guys, the stimulus package is a done deal. It'll probably be signed before Friday. They should get all those checks out before the end of the month, and that'll be a done deal. And then it'll just be debt. Um, I don't have an opinion really on the stimulus, because one, I don't think we need it. I think we need the protections for the evictions and things like that. I think we need a little shot in the arm to small business, non-corporate small business, your mom and pops. But I think that $1,400 check, we proved it on the $600, right? We entered a play in Ollie yesterday and it just went off. Retail is going to be hot over the next couple of weeks, guys, as that money comes in. Studies proved that $600 check went to retail. It didn't go to rent. It didn't go to food. It didn't go to back bills. It went to retail. And that's a fact. And this one will do the same thing. And that's why your Nikes had a good day yesterday. We took up a flyer in Ollie. Ollie just went off yesterday. It looks like it's going to continue the run. But if you're looking for a short-term trend play, retail right now, right? Nike reports earnings on the 18th. Ollie reports on the 18th. We got some high-profile retail releasing, which should boost the sector. And with the mentality of the market being that money will go right into retail. Why not? We took a flyer, whatever. Other than that, guys, we still got those VIX puts at 20, and we'll hold on to those for right now. We think that VIX will trickle down a little bit more. And we're short Coca-Cola. We think Coca-Cola at some point will burn out here. It's not really pushing. It had a good day yesterday, but that was the first good day in a while. Other than that, guys, we're just kind of stepping back. We've got our portfolios. Like I always tell you guys, you should always have a portion of your portfolios designated for non-options. You shouldn't have your 100% of your portfolio in options. If you do and you're successful, God bless you. But for the normal viewer, have a nice portion of your portfolio, maybe about 50% in your portfolio, in 40% in your portfolio in these great dividend stocks, growers, things like that. The stock of the weeks we share with you. And then you put another 40% maybe in your options, 30-40%. And then the rest you kind of keep diversified. And your favorites, maybe some Bitcoin. Bitcoin's hot right now. It's back at 54,000. All you Bitcoin nuts out there, man, congratulations. That was a really good, just to touch on Bitcoin from my point of view, that was a good technical move. It had a nice rinse there under 50,000. And it held real nice. It had one day there where it got a little sketchy, right? It went down to like 44, 43,000. But those bulls stepped right back in, and now it's just going off. So congratulations. Good buy the dip moment for Bitcoin. Let's go look at some charts, guys. Why not? Anyways, this is the comp. This is a NASDAQ. And you can see, look, even with this morning, if you look at futures this morning, you see how that NASDAQ's up 300 points in futures. If you take that add 300 points to where it closed yesterday, right? 12,609. So let's say 12,909, right? If you go there, you're just at the top of yesterday's bar, not even at the top. So you're still trading within this bar right now, and you're still trading within that mush. So again, this is a very deceptive market right now, right? You have these big 400-point days, and you think, wow, the market's just going off. But the next day you're down 400, and that's what this churn is. And it's really hard to trade unless you're on a short-term trade. Day trading, really. This is a great environment for day traders. Let's go look at the S&P 500, because this will shock you guys. You see, even with yesterday's red day, we're still just in that collusion there, and we've kind of charted it. This is kind of your danger area, the bottom quarter of this panel here. This is like a comfort zone right now for it. You see how it'll take a little shot at end of the world, and then it'll just get right back into its comfort zone. Needs to break over that top, or we're still in that sideways trend. Hard to get your footing. Now the Dow is getting that dividend boost. You saw it yesterday, and you saw it on Friday, right? And that might be, with this stimulus deal almost being a finality, the debt saddle, right? Inflation, the debt saddle. Now that 10-year rate, remember, guys, it's not so much that the rate's moving up, guys. It's how fast it moved up a couple weeks ago. It just popped. Rates aren't meant to do that. Right now, that 10-year is doing what's normal and what is maintainable. And that's, one day it's 1.5, then, settles kind of around there, 1.55. Then it moves up slowly to 1.6, kind of finds its spot there. That's the normal rate move, because anything too fast, you get this really bad thing. Not inflation, you get hyperinflation. And you're in a position where the Fed has no way to control it. So it gets to be a little sketchy. Other than that, guys, we'll see how we shake out. Futures are up a little bit, especially on the NASDAQ, up about 300. The Dow's up about almost 100. It's been up more than that. When futures first opened overnight, man, it was up about 200 points. It looked like it was going to be a blasting rally. But look, guys, we'll be back later today. It's Tuesday, so we'll have our afternoon stock of the week. Don't forget last week's stock of the week, ET. Which is a nice little oil play, energy play, and it's doing real well already. And it's got a great dividend. There you go. You want a little risk protection through your stocks. That's how you do it. And then the previous stock of the week, which was CCI, which is Crown International 5G Towers. and another great dividend pair. Now, remember, guys, anytime we give you these stock of the weeks, they're meant for portfolios of any size. They're not just made for big portfolios. It's like with the CCI on any brokerage, you can buy slices of that. You don't have to spend $150 a share. You got a smaller portfolio. You're just getting started. You want to get some Warren Buffett style dividend love over time. You want to get one of these great stocks in there, buy $50 worth of it. You know what I mean? Every journey starts with the first step, guys and girls. So get that first step out of the way. There's another old saying too, right? The sooner you take that first step, sooner you take the last step. That sounds too much like my dad. But anyways, guys, let's see how we shake out. Okay. Like I said, we'll be back this afternoon with our stock of the week. If you got some time and you're interested, go check out ET, check out CCI. We like those. We hold those stocks. Other than that, guys, let's see how Tuesday shakes out. In the news, like I said, the stimulus bill is kind of going through. I don't think we need it, but we're going to get it whether we like it or not. If you're getting a $1,400 check, good for you. Please spend it at Ollie's Discount Bargains. Anyways, guys, let's call it a morning. There's nothing else on the news. I mean, we're border crisis, saddle in debt. You know what I mean? It's just another day in the United States. Everybody's a racist. Anyways, guys, I'll see you guys for the stock of the week later this afternoon. You have a great morning and trade smart. Okay, guys, we're kind of still in that sideways channel. Don't let these big moves, the intraday big moves fool you there. Okay, guys. All right.